Hello, Maverick traders. Welcome out to your market roundup, August 14th, 2023. We are approaching August monthly options expiration this Friday, August 18th. So, for our option traders out there, be sure to shore up your books. Make sure you're aware that it is monthly expiration. Let's get right into it. So, for today, we're going to look at meaningful market news, broad equity markets, kind of a top down approach, what's happening in the commodity space, technical analysis on the major indexes, and then the sector heat maps where money's rotating, and then finally we'll get to some bullish, neutral, and bearish trade ideas. With that, let's jump in.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so broad markets, you can see it was a flat day for the Dow and the Russell 2000. However, S&P and the NASDAQ 100 were up sharply, and it's an interesting dynamic where we saw a bounce back from the leadership group, the large cap tech, especially Nvidia, which we'll touch on, but Apple, Google, Microsoft, Amazon, all of those big names up sharply. Oil and gold slightly lower as the US dollar has rebounded. On the daily news, Nvidia jumped 7% on a Morgan Stanley upgrade. They said Nvidia is going to be the big beneficiary of this rotation into AI, into artificial intelligence. They are right at the center of all of that and have the best possible ability to capture a lot of that revenue and profitability over time. Other daily news, UBS is going to pay a $1.4 billion fraud fine on mortgage-backed securities, basically admitting some wrongdoing there. And you would think that, well, anytime fraud is involved, that must be bad for the stock. Interestingly enough, the stock was up on the resolution of this. Getting those things that markets already knew about behind them is a key point. Advanced decline line, notice even as the NASDAQ was up 1%, we had 56% of stocks going lower, only 40% going higher, and then the 50 MA has switched. We're now slightly below that on the broader scale, 52% of stocks below, 48% above. This correction has definitely hit a variety of stocks and markets. Now, as we look at the major markets here, you can see that we've been upward trending big picture. Of course, higher highs and higher lows all the way up. This recent correction has brought us down, and you can look at it sort of like a flag type of pattern, where we've been coming down in a little bit of a channel. We're right at the 50 MA, that last line of support, and the market bounced sharply higher. A little move here up above this, and the market's held on a deeper pullback. Deeper pullbacks come back to the 50 MA. A stronger market environment won't even give that much. It'll just go back to the 20 MA. So this is a deeper correction. It's not anything that necessarily has to derail the market. This might be that pause that refreshes. As we look at the NASDAQ, little bit of a false break here. And why do I say it's a false break? Because you moved below the 50 MA on some volume, but notice how quickly we recovered above that today. So this is what we call a bear trap. Anyone that jumped in on this bearishly and they said, oh, we've broken this level of support, time to get bearish. They jumped into bearish trades. They shorted the market. They bought puts. Now that the market has bounced back above it, they're trapped. They're in a losing position. Either A, they stop out and say, too much pain, uncle, I've had enough. I'm out of this and I'll find some other thing to trade. Or B, they hold on and hope. And a lot of new traders do that. And they say, well, I know this market can't go up. I know this or I know that. And the truth is you don't know anything. There are no certainties in the market. And so those that are holding and hoping that this bounce back will quickly fade off, they'll get back to break even sometimes. They won't always. And if the market makes another big leg to the upside, what do? Now they scramble. Do they capitulate, throw in the towel? Do they continue to hold and hope? it is a dangerous game to hold and hope. But this is a little bit of a bear trap dynamic where the bears could have jumped on that and said, I want to pile in. Now, I don't think it's good form to pile in on that type of trade because A, you'd already been coming down a lot, and B, the longer term trend has been up, and C, the S&P is still above the 50. So do we think the Nasdaq has to break down violently? I just don't think it's a great short setup generally, and so far it's not as the market bounced back sharply today. As we look at the heat map, again, large cap tech came screaming back. So there's a lot of red on the chart, but the tech sector in general, which is so important, it's such a pivotal spot in the markets, so heavily weighted to tech, well, as it goes, so goes the S&P, but you notice that there's more stocks in the red. There's actually more red on this heat map. Certainly regional banks had a rough day here in that segment. You can look at utilities over here, were all pretty much red. Even energy, which has been doing pretty well, more red than anything else. I mean, consumer defensive, very red. Industrials, quite red. Real estate in the red. So most of the broader markets were in the red. This is your tech sector. Break it down right here in essence. And they call this consumer cyclicals and communications. They're really calling this segment, but realistically, these are all part of the NASDAQ 100. They're all part of that large cap tech space. Now, let's get into some trade ideas here. So if we look at the bullish side, Dell, FedEx, Monster, NUE, this is a steel company. U.S. Steel was in the news. Cleveland Cliffs wanting to buy them out. And there's some battling back and forth. We highlighted a few weeks ago XLY, the consumer discretionary sector, for a sideways trade. That has spent the last couple of weeks doing exactly that. And then on the bearish side, some ideas. ARK and gold miners, Rio and Square, these payment processors like Square and PayPal have really been suffering. So let's look at a few of those charts together. I'm going to start with Monster Beverage. And if you look over the past 20 some odd years at the best performing stocks for the past couple of decades, this will be right up there at the top of the list. And this is a clean, really clean bull flag pattern. Notice the flag pole and then the flag formation, which in this case, just very nice channel. You can draw a down trend line, you can draw a channeling line underneath that, and we're starting to pierce our head just above these levels of that downward slope. So if you just forecast this slope, we're now starting to break above that. I think Monster looks like it could be a monster on the upside. As we look at NUE, again, the steel companies were in focus, and if they want to buy U.S. steel, maybe all of these are up for sale. Maybe all of them have an underlying bid. Maybe all of them are in competition to be bought because ultimately somebody's a buyer. Somebody's aggressively coming after U.S. Steel, Nucor, huge steel company. Nice basing pattern up there near the highs. Should be a nice breakout looming. On the bearish side, here's ARK, and ARK is an ETF. This is the Cathy Wood area. I don't think it's a short right here, but boy, it looks like a good opportunity on a little bit of a bounce. If you come up underneath these declining moving averages and have a nice setup here, that would look very good. So I think it's on my radar for next opportunities to get bearish. Give me a bearish setup and I would be looking to pounce on it. I'd put Square in that same category. This has been a long-term negative stock for me that's worked out quite well in the past few months as Square has really struggled. Here again, I've recently closed a bearish position I had on, but give me a bearish setup, give me a bounce, give me some sort of bear rally. And I do think a little rally is coming. Again, we talked about the bear trap in the S&P and so forth, or in the NASDAQ specifically. I think a little rally's coming, but on that rally, I'd look to get bearish for the next wave of selling to come in and hit Square. Big volume on the way down. declining volume on the rally would be picture perfect. So for the market outlook, we're in this corrective phase, this bearish divergences, all the things we talked about at the highs. I'm just not surprised because we had really good exhaustion criteria that the market has faltered. However, that has now run its course. I feel like the correction has run its course. We had a little false breakdown. There should be a quick recovery. Maybe not to the highs, but a little bounce here for a few days. And then we get to see how strong is that bounce? What's it being led by? Are the other sectors performing? Are we seeing improvements? We really get to look at the bounce and see whether we want to short into it or whether we want to buy that for a continued upside move. Retail sales come out tomorrow, and then like I said early on, it is monthly options expiration Friday. You'll have your expiration for a variety of different products. I think it's triple witching, so you'll have some futures expiration, some other things. On the earnings side, Applied Materials, BHP, Cisco, Deere, Home Depot, Palo Alto, Target, and Walmart. And when you get these retail stocks, that signals the end of earnings season, and we have now hit that. So earnings season is coming to a close. Thanks everyone for being here. Have a great rest of your day. On behalf of Maverick Trading, I'm Corey Halliday. We'll see you next time.